Welcome. Today, we're diving into the foundations of financial management and security. We're going to map out the interconnected financial ecosystem that, well, literally runs our modern lives. It's not just a bunch of boring numbers on a screen, it's a living, breathing network. Let's uncover how this machinery actually works under the hood.
So, what connects your paycheck to global economic growth? I mean, it feels like those two things should be worlds apart, right? You've got your bi-weekly direct deposit over here, and then the massive, complex engine of the global economy over there. But they aren't separate at all. They are deeply, intrinsically linked. Money isn't just some static object, it's an active ecosystem. And to really master it, we have to understand the environment it lives in.
Okay, let's dive straight into our roadmap for this overview. We'll start with a welcome to the ecosystem, then look at institutions, the money managers. After that, we'll hit interest rates, look at building your financial security, and wrap up with the ultimate financial connection.
Moving right along to institutions, the money managers.
Every ecosystem needs a solid foundation, right? Financial institutions manage money and provide those essential services, acting as the foundational gears of the entire financial machine. Without them, capital literally couldn't flow from point A to point B. They're the absolute essential facilitators of our modern economic life. In our day-to-day lives, this ecosystem takes the form of places you already know: commercial banks, credit unions, investment firms, and online banking platforms. These are the actual hubs, both physical and digital, where the whole ecosystem operates.
Now, there's a fascinating dual nature to these institutions. On one side, you and I use them to manage our personal money or, say, secure a mortgage. But on the flip side, employers rely on these exact same institutions to process payroll, secure corporate loans, and handle complex daily transactions. Basically, everyone is drinking from the exact same financial well.
Next up, let's talk about interest rates, or the cost of money.
Interest is a seriously active character in our financial story, and it plays two completely different roles depending on where your cash is at. If you need capital, interest is the cost of borrowing. You're paying for the privilege of accessing funds right now. But if you have excess capital, it becomes the reward for saving. You actually get paid because you're letting the institution use your piece of the ecosystem. It's the ultimate balancing act: cost versus reward.
And this brilliantly illustrates how that balancing act creates a massive macro impact. When interest rates shift, it immediately triggers a change in consumer spending and borrowing. If borrowing is cheap, people go out and buy cars. If saving is highly rewarded, money gets locked away in accounts. When millions of people make those decisions all at once, global economic growth is directly influenced. Literally, one small rate shift ripples out and changes the entire world's trajectory.
Here's where it all connects back to your workplace. It's not just everyday consumers deciding whether to buy a car. Businesses meticulously evaluate these specific interest rates before they even think about financing expansion projects. If a company wants to build a new factory or hire 100 new employees, they have to calculate the cost of borrowing that money. If interest rates are sky high, that expansion halts. If they're low, the business grows. That right there, that's the ecosystem in action.
Let's shift gears to building your financial security.
This is the ultimate destination for all of us. Financial security just means having sufficient resources to meet both your current and your future needs. You need to be okay today, pay rent, buy groceries, but you also need to be totally secure decades from now. It's the overarching goal for literally everyone operating within this complex system.
What's really crucial to understand is that security breaks down into 4 essential, equally important components. You really can't rely on just one. You absolutely need savings for those immediate shocks, investments to outpace inflation, insurance to manage catastrophic risks, and responsible financial planning to bind the whole shebang together. These 4 pieces have to work in total harmony for you to be truly secure.
Finally, let's look at the ultimate financial connection.
So, the crucial takeaway here is this. The ecosystem connects workplace expansion via interest rates directly to your personal financial security. Think about it. If institutions are healthy and interest rates encourage your employer to expand, well, your job is secure. That security allows you to fund your savings, your investments, and your insurance. Your personal security relies on the macro machinery of interest rates, and the entire system relies on the micro actions you take every single day. They are completely and inextricably linked.
Knowing that absolutely everything is connected, from the interest rates set by institutions to the payroll processed by your employer, are your current financial plans built to meet your future needs within this ecosystem? Do you have your savings, investments, insurance, and planning properly balanced to navigate whatever shifts come next? It's definitely worth taking a hard look at your own resources today. Thanks so much for diving into this analysis with me.